building it from the ground up is definitely not an easy thing. And I've heard from other people that have done hedge funds or, others that run their own. Yeah, like it is not the business to get into. Oh boy, it is so much work in the end. And then it pays off once everything is, ideally where you want it to be.
Sitting down today in Seoul with Andres Granger. Looking forward to talk about trading. Of course, we had a few interviews before. I think we sat down a few times. Discussed trading and managing a pretty big fund of crypto nowadays. So looking forward to talk about his returns, things he's been achieving, and of course, trading styles and stuff. First of all, good to see you here in person for the first time. Appreciate it.
Really good to meet you. Thanks for having me out.
Tell me a bit more about what you're up to these days and kind of what trading is like as a lifestyle.
Oh boy. Well, over the last year, it's just been kind of the same day in, day out, general trades, general, lifestyle. I mean, once we got this fund going about a couple of years ago, since then it was, a real journey in the beginning, and now it's built up its own momentum. We're growing out the team. So it's kind of a lot of structural stuff. So now instead of just my day being trading, now I'm having to take care of some of the structural things inside of the business in general. But still, it's like I really have to focus 90% of my time on the trading, which is just making my days a little bit longer. And still, it's the fun part, though, without a doubt.
Tell me about the fund. Maybe you want to share about like how much asset you're managing right now and kind of how much you've grown over the past few years. A bit more stats about where you were at a few years ago.
Okay. So first off, what we do is separately managed accounts. So we'll manage accounts for individual clients. Those are usually like fund of funds kind of setups. So each of them makes an agreement to fund us, so much over the years. They usually start out with a $1 million account, and then they've been consistently growing, and then we take on new separately managed accounts through other clients, funds, whatever. And it's been interesting, been a lot of fun. It's very different than just having everything, in-house in one structure, instead having to make sure everything is, in the right place, that everyone's, doing well and all receiving the same returns. So it's quite a bit of work in that regard, but it makes it a lot safer for the clients, and they're definitely happy with it. The second part of your question, which I've somewhat spaced out on already, but in general, doing this and kind of growing and bringing in new clients, managing this, that's the daily.
How much asset do you have in the management?
Now? So now we have it's just a little over 25 million, and with other accounts that have yet to start, as in we need to get those up and going this month, but it's kind of just growing, steadily month over month, with more incoming from current clients and then new clients onboarding as well.
A lot of crypto funds out there, I think, would just kind of try to buy with the trend and kind of ride the up movement. You make money both when it's trending, of course, and when it's kind of going sideways. Tell me a bit more about how the strategy behind those funds work and how you make it profitable.
Okay, so in general, we do run 3 different strategies now. When we talked before, our fund ran 2 strategies. One was the market neutral, which I had, and then our other is the directional. So it's more of like a trend following system, which is, great to have in the bag. But our newer edition is somewhat of a mix between something like trend following and also a market neutral system. It's volatility arbitrage, which is based in the options area. So that does see a little bit more volatility than something just generally market neutral that you typically see, but also the returns are generally much higher. But really, for what I do in the market neutral area, that has to do with using the futures contracts against the overall cash market and being able to basically go long in one kind of asset and then go short in a derivative, and then overall capture an arbitrage in between those. So that's the simple version of it. It isn't really too hard to grasp overall, but if it's your first time hearing or looking at market neutral strategies that, market goes up, market goes down, but you really kind of remain with the same amount of capital overall, even though you're invested in something. It's a different way to look at things, but very, very interesting. When I first found out about these kinds of strategies, it really kind of like caught my attention because overall, I really just don't like, number one, drawdown, or number two, risk in general. So something to really minimize risk really spoke to me from the beginning.
How do you spot these trades? Because do you need a specific platform or specific software to do it, or can you just like look at the chart and spot these trades instantly?
Some of it is software based. For certain types of arbitrage strategies, some you really do need some kind of a separate setup to be able to really be able to view the market at all times. Some of these things are also very hard because of the speed and accuracy you need in execution to be able to capture arbitrage between two different moving markets at the same time. So some of it is based on that. Some of it is also just basically what you can see directly from the exchange or from the order book or even from the charts in general. I think a very simplified form a lot of people generally talk about online is something like, you go short Bitcoin and then you go long Ethereum, which is definitely not overall market neutral because, those are two different assets. It's still just a different way to kind of, long one, short the other, and overall have your bias that one is going to go down, the other one's going to go up, and you're going to make money somewhere on one of those sides. In general, doing this, trying to find these kinds of trades, you can start off without needing software or having anything very high tech. I did myself from the very beginning and kind of started on my own once I heard about this kind of stuff and really just grew from there. I definitely improved at it over my first couple of years, but it was a real eye-opening kind of life-changing. Oh, you can do it this way. It doesn't have to just all be one way or the other. There's other ways to do this. Interesting.
Now you've got pretty much robots to take these trades for you, but tell me about the time before when you didn't have robots. How did you kind of make this work, trading all by yourself?
Yeah, well, to be honest, still, I really love to get in there and get what's the good old phrase? Get my hands dirty and kind of work around these things. And I still do that on almost a daily basis. At least several times throughout the week, I want to put on some trades and, get some experience. And just keeps me sharp with actual order entry and execution. So it's fun in some ways, and then it's also useful because you can start seeing little dynamics that are happening, which then gives you ideas of, hey, here's another kind of way I can change the algorithms that we run to trade in and out of different trades, maybe do a little bit better or avoid other kinds of pitfalls and just overall get better execution for the trades we're doing. So I do still do that, really love it. But it has really changed in the fact of back in the day of doing everything on my own, having to check into my own account and kind of see where things are at. Instead, not just having algorithms be able to trade, but also having our own personal dashboards that we've created that have just been a real help to be able to look at all the little bits that I really want to see at any given time, see what trades are making the most money, what trade made the most money in the last hour, or maybe say 6 hours ago, anything very, very specific, and see where I'm not doing so well, what's not really making the most money. Let me do less of that or cut this trade down a bit and move around my overall risk portfolio just because of that. So it's been an amazing help, but then it also has really, really improved overall returns as well. And that kind of thing is definitely more needed when, account size keeps growing and the trades just get a bit harder to get into on larger and larger size too. So that definitely helps.
What's some of the data you look at for like understanding how trading is going? Like what kind of data or dashboard do you want to look at?
Some of the simplest stuff is just the overall rates in the market. Where are the best kind of opportunities right now? A great deal of important information is volumes that are going off as well. So that's like how many market orders are hitting the market that are making things trade out. Maybe something could be like the spread difference between the best bid and the best offer. And has this widened a great deal? Has it widened, plus is there large amounts of volume going off? Then that might mean we can get much better prices by using limit orders to get into these kinds of trades. Or is it a situation where the overall market is basically just grinding away, not moving, not having any kind of direction, and there's not a lot of volume being traded, which may make it very difficult to move in and out of trades on size. And at some points you have to just sit in trades, even if they're not working for you, or even in this market neutral style of trading. It's making you lose some money right now, but overall the market conditions would show you that, oh, if I try to move out of this trade right now, I'll have to like take a little bit of a loss trying to push my volume outside of this. So it's best to just stick with it and let this work out. Let a little bit more volume come in, let a little bit more action happen. Often these trades can then turn around and then you're back to, making some profit. Or if they don't, then better volumes come in, maybe at the US Open, and then you're able to, move around a little bit easier. So often I do see that though. The Asian time frame, so not European and not the US Open and US time, but the Asian session can be a lot more tricky and a lot slower. If you're able to use, some of the Korean exchanges, then actually that can be a really great time, but it's very few people that have ability to use those because of the laws here in Korea, which I don't know if we've talked about yet, but
Yeah, sure.
someone came. Do you mind if I mention that?
Yeah, for sure. Yeah, definitely.
Okay, great. Here we are today in South Korea, of all things, right? Come all the way out here to see this wonderful one. And I'm so sorry. What's the weather today, though? Nothing but cloudy and rainy, but lucky enough, it's not raining in the city that we're in currently. But I've heard that throughout Korea today is a big stormy, rainy day. So hopefully we can avoid that on your amazing, wonderful trip here to South Korea, K-pop town, Central Korea. Do you mind if I actually ask you, so far, I mean, you haven't been here that long yet, but just I'm curious because I've lived here for so many years now, which really kind of shows my age. But how's it been so far?
I mean, a lot of things here are different than what I would be used to. It's kind of funny. We come from Japan a few days before, so coming here from Japan, it's kind of surprising a little bit. And things like don't work the same way, people are a little bit different. But overall, that means it's a good place.
Great. I mean, it'll be amazing when you get to see other parts of this place. But I have to second that. I was really blown away of, first off, thinking like, oh, Korea, Japan, both like popular places. They'll be somewhat similar, right? But I found that these two places of Korea and Japan have been just very, very night and day difference in so many ways I wouldn't have expected in the beginning. But yeah, it was that was a real kind of shock. But yeah, it's both great places, both really good for travel. So
you started trading too when you moved to Korea. So tell me about kind of those early days of trading when you had a job, working, I guess, 9 to 5, or like you told me before, like 9 to whatever, 10 or pretty late. How was that to learn to trade, and how did that kind of work out for you?
Yeah. When I first started and was first started trading and was working, also my work career had changed over the years that I've been trading. It took quite a while for me to actually go, not just full-time trading, that was one thing, but then transfer to that and actually be working in the general industry. But when I first started out, I was doing not just a 9 to 5 job, but I had a company that I was working for where they kind of outsourced me to 2 other offices So I worked 6 days a week, and I worked from general morning hours, but then a secondary job that kept me out till 3 days out of the week. I was working till 11 p.m. at night. So it was extremely rough. And I'd get this 2 to 3 hour break to transfer between locations. And I'd use that time to like, let me go over trades. Let me create trade ideas and like count out these candlesticks and see like, could this be a trade? And over time, things obviously changed, but those were the first beginnings of the trade life. And after that, I moved into a very different type of career where I was traveling between China and Korea. And that offered me so much more opportunity to work on my own trading, because I would go work in China for 2 days to 5 days out of the entire month, kind of set up buyers for whatever kind of specific medical product they were trying to source, which was usually like high-end electronics and different things that hospitals would use, and then try to get the manufacturer to make a deal on price here and then make kind of the whole deal happen. In the meantime, that would just be, calls and emails, which I could do at home and just wait for the next email to come in. Some of the emails would be simple as just copy paste, see when the deal comes through. So I was really, really lucky for that. But I really sought a kind of position out that way that I could do that, then have my own free time to work on trading. So during that time, I would say between the travel, because I'd have to travel travel out to China and then travel between different cities. So that would eat up a few days. But I was generally trading 3 weeks out of the month. And then 1 full week would just be like all work, try to earn some cash, and then go right back to trading. And it was before Corona. It was nice. There was, good money flying around for everyone in that kind of industry, which was great, because then it really afforded me like, hey, I blew my account this time, dang. Or no, you take a little drawdown, and then you kind of want to refund yourself or run different accounts at one specific time, or fund a specific trade idea. And it really was a great opportunity for that, to be able to do that kind of work, and then be able to like have this great time to focus on my trading and get better at that. So it was a great opportunity. But I would say if anyone really wants to get, into the trading world and do their own full-time trading, it might not be the best thing to go right into full-time trading when you're ready to do that, but instead find some kind of other little side thing that won't take up much of your time, where you can earn some money. And in another way too, it just feels great to get outside of just the trading world and then be doing something else and feel like you have this importance of like, I have this thing that I want to be working on, and you kind of earn that time. You earn that time that you can spend trading, which for me too, it helped to keep me a lot more serious about the trading that I did. Then when I did go full-time and was doing everything on my own, it was a little bit, I think everyone knows this. When you work on a computer all the time and there's no one around you and no one to really talk with about this kind of stuff. But it's also been a lot of fun, actually, just meeting people over the years and being able to talk trading in person, which this is one of not that many opportunities that come along. I think some of the viewers or audience get that.
What would you say made you profitable? Was it like a different strategy or different method you use or mindset, or what got you to actually make money trading over time?
I would say it was generally 3 things that really helped and made a real big push. One, which was just absolutely crucial, being serious about making improvements on the trades that I did. And I could definitely look back on it. And I mean, I've looked back at my old videos and been like, oh man, I was off, but it wasn't too terrible, but I was still off in what I was doing. But actually making recordings, reviewing, and keeping up with that, and being very diligent, making a little list of like, okay, these are my top 5 flaws. I want to fix these things, fix any kind of error trades, fix any kind of laziness, and then be taking only the trades that I know that I should be. Whether they work or they don't, just be taking those, and every time they pop up, whenever I visually see them happen. The other thing was going to a much shorter time frame in general, and then getting lower fees. Because I worked in futures contracts and traded, products generally on the CME, getting low fees in the low comms for something like the NQ or any of the kind of currency futures, it really did help. And you can trade those this is so far back when there wasn't micros at all, which those can also be very costly if you try to trade very fast. But having to trade either minis or even some full contracts, like something like the DAX on the Eurex exchange. So getting low fees really helped, but then just trying to be correct in the moment. I have an idea of where things are generally going. I see the action that's happening, and then I take my trade. If it doesn't work out, it's something that's not going to hurt me too much overall, but just making constant repetition of these trades day in, day out, generally on the low end, maybe 10 trades in a day, on the high end, nearly 100, and then building that up over time. And then later on, when I started working in this cryptocurrency market, now in general, if I do similar trading styles, there will be over 1,000 trades in a day. And again, it's by hand and everything, but that still might be a few hours of broken apart different sessions, generally 30 minutes to at most an hour. And even I've built that up over time. Doing this, I remember back in the day, it was hard to do 15 minutes of this kind of super intensive focus and in and out trades. You're trying to do it in less than just a few seconds. 3 to 5 seconds is still like larger end. Start feeling like you have risk on in that amount of time. So you need these very fast markets. And it was things like the NQ or the DAX, or some of the currency markets that trade futures in the US session that allow you to trade very quickly.
And it's something you mentioned, you actually record all your trades on a video. How often do you go back to these trades to review them?
So now I don't go back to review old ones, right, but once in a great while, I'll actually pull them up and be, how was it back then? Let me look back to 5 years ago, 6, 7, 8 years ago at this day and time. What was I doing back then? And like, oh man, what a nightmare. It's almost like looking at your old childhood drawings of like, at some point you can look back and say it's cute. You got a little bit older and like, I should have been a little bit better with this. Oh boy. But even now, if I go back and look at recordings, I won't record everything that I trade like I used to. That was for learning and improvement. I generally have an idea of what I'm doing. If things start getting a little bit tricky, or I start seeing different kinds of anomalies in what I'm used to seeing, then I'll start, okay, I need to start recording what's going on here. And I know that this is going to pop up again. I want to see what really is going on here. What's the reaction to whatever I'm seeing, and see maybe I can do something with that. But it's usually that I want to watch out for this. And there's so many different little things to watch out for, so you can save yourself from taking a hit and generally keep away from some risk. But seeing something that really provides a brand new opportunity or a little bit of an edge, that's a little bit harder to spot and a little bit more rare. Those kinds of things come up, like I'd say, when you're new, you see it more often. You see a little something like, oh, maybe I can exploit this. Later on, when you've been there, done that, and you've seen quite a bit of stuff, you kind of look at things and say, this just looks like more risk to me. Or maybe I'll start slowly trying this out. Maybe I could make something out of it. But generally, if I do go back and review videos, it's some kind of unique things happening, and then record a whole video. If I didn't see this happen again during that time, maybe I don't have to check it out. But but I'll usually try to go back and check things. I'd say on average now, a couple of times a month.
It's more than most people would actually do it. So.
Oh gosh. But I would suggest this, if you're getting started and everything, it should be like record everything you do and review everything you do. But the big trick that did help me a great deal was if you record your entire session, then go back and watch your session from beginning to end. That's just way too much to deal with. And I used to do that, and that was just too much. It's best to just record your entire session, and then what trades you did do, go back and watch every one of those trades. So maybe I'd do like a 15-minute session, and I felt like the market was super slow, and I only took 2 trades during that time. But then go back and review that. And maybe I would do something like these short sessions, 15 minutes to 30 minutes. Take a tiny break, do another session, and then after that, then review those. Then after that again, go back and do another session or 2, and then that would be like the end of day, and then kind of take notes out of that. But without a doubt, I was reviewing, taking notes at least half the time that I was actually trading. So I would have, what I would call 4 to 8 hour trading days, but definitely half of that time was fully just review and coverage of what I did, what can I improve, how can I stop making stupid mistakes.
Do you feel at a disadvantage being in Asia when you trade, because you would think the system will be slower, like less trades, or would you kind of get better results if you were like in America or something?
I do really like being out here for this time frame. I do trade a lot of the U.S. session, which typically ends up being like 10:30, 11:30 at night out here, which is pretty rough. That does allow you the open, but I mean, in what lifestyle do you really want to be trading into like 2, 3 a.m. in the morning? And then, hey, Asian session opens, time to get back to trading. When things are really busy at work, at the fund, then I will be trading like that. Definitely. There's definitely at least a couple of days out of the month where I'm doing that each month. It does happen, but as for this time frame, I really do like being here because I'm able to trade the European session, which is a nice mix between slow and fast. It's an in-between these two different markets. Sometimes in the Asian session as well, markets really won't move overall, and you're able to like position yourself at least. You're able to get in an overall position, and especially for our directional fund, that again is fully automated, so it just trades between whatever times. But because of that too, you are able to take advantage of the Asian time frame and not just be forced to have to chase the market up when you're trying to buy or chase down when you're trying to sell, which happens a great deal more in the U.S. session just because of the speed of everything and overall volatility. But I do like being able to have a decent eye of everything. It's hard for me to say if I would actually just be better if I was in the American session time frame and always trading that, because it's been all these years out here and now I'm so used to it this way. I'm sure at times it would have helped because I did stick to the US session quite a bit, especially when learning. I like what I have now, it suits me.
You kind of get used to it, and then it just makes sense. Tell me about how the fund got started. Like, what are some things you had to do and what came about and how you got the first capital for the fund?
First off, I was generally on Discord, chatting with different people about trading overall, and markets were kind of just going crazy right at COVID times, and so the trading world just really blew up then. And I joined a server, like a really privatized server that had a lot of very interesting people on it, very, high net worth or, unique people that had been in the trading world for quite a long time, some that had worked for major funds, even in the traditional finance world, the general, Morgan Stanley, Goldman Sachs funds, and being able to chat with some of them, make some friends, and then talk about the kind of trading that I was doing. Overall, it was a fun time, and actually making friends with them. They took more of an interest in me, and one thing kind of led to another, and one guy introduced someone else that was doing their own kind of fund. And this guy said, hey, why don't you come just trade my own personal account, for fun or whatever. And yeah, great. I've done that before. So, all right, let's try it out. Sure. And then it was the whole like Terra Luna, the stable coin, and the Luna coin, whatever, that was the kind of whole thing where it all blew up. Once that happened, the entire market was just insanely volatile during those few days that was going on. Everything was kind of like, falling apart. It was really since that point, then, we saw just not that long later, the whole entire collapse of FTX, and we've seen that play out over time. That's going to make a really good movie. I heard they're selling the rights to that, so I can't wait to, I'm going to be there opening day to see what. Well, I wonder who's going to play Sam Bankman-Fried in that movie. That'll be interesting. Probably be something like Tobey Maguire or something. Have to get a little chunky or curly hair, but he would be a good one. So I was working with him. We were, had this deal where I was, working in his own private account. That happened, and he really liked how I had handled that period of time. And even during this, large volatility, a lot of other funds overall took some nasty hits, and we were able to come out on top. And from then, he was, okay, do you want to actually come here and be our head of trade? Which was a small fund at the time. And so I joined a small team, and then someone else that I had known from the server as well, who had a very long-term career in finance. Also, we pulled him in. So he's been a great team member to work with. Since then, we've just all been kind of working together and trying to build this thing out. And yes, it's definitely been a lot of work. Making a hedge fund is not an easy task in the least. Building it from the ground up is definitely not an easy thing. And I've heard from other people that have done hedge funds, or others that run their own. Yeah, like, it is not the business to get into. Oh boy, it is so much work in the end. And then it pays off once everything is, ideally where you want it to be. But the growing stage is it's definitely so much that goes into it. I mean, you could probably see the gray hairs that are coming out now.
What do you think is the toughest part of building the fund or running it?
For sure, the most difficult part is the overall organization. I mean, generally keeping clients happy, but then getting the marketing out there that, we have something that is beneficial to a lot of specific clients. So overall, some funds don't want to have anything to do with something in the cryptocurrency market. Other funds not only want, but need a percentage of their portfolio in some other type of asset. And then that's where we come in. Some others want only market neutral. Others already have their own market neutral thing going, and they want to outsource directional. But just in general, there's quite a bit of other funds that are out there that run very similar, if not the exact same type of strategy, yet we all kind of get different results. And so it's not only providing something that our clients are happy with, but providing something that, we compete with the overall market and with our competitors and can stay relevant, not just year over year, but month after month. So it's definitely something that keeps you up at night, just to make sure that everything is where it should be. And, we're going to turn out another stellar month, but yeah, it's definitely still a lot of fun. Without a doubt, it's the funnest work I've ever done. But the most stressful, Yeah, I would agree on that too. Yeah, the most stressful. Okay.
What happens on a slow month, or let's say a bad month? Do you have clients reaching out to you wanting to pull out of the fund, or do they kind of seem pretty calm?
So no, that's true. Once in a while that does happen. And it's usually not because of, oh, you lost some money. We've done very well month over month over month to, provide some kind of, decent result. We just put out our monthly report today. And as of this month, which we just entered October now, our market neutral fund has made a profit of 19.67% for the year. So hopefully we'll push that well past 20 by the year's end. We've got this last quarter. We're here in Q4 now. Let's get it, guys. Let's get it. But yeah, it's definitely a hard thing to run a market neutral strategy and do double-digit returns and be able to do that across SMA accounts. It's definitely a lot of work that goes into that. But still, even though you may be providing this does happen all the time. It's we're managing funds from other funds that have their own clients, and they're spread across several other funds that are managing money for them. And they say, hey, your performance is down over the last 3 months in comparison to this other fund. So we're going to pull half of our money that we've allocated with you, and we're going to put it into these other guys. We're not going to completely close our account, but we're going to take out a portion of it. And then you'll see like a month or two goes by and we're pushing this back in and we're adding some more. So they, just like you might be with a trade, they're constantly juggling their portfolio. So it definitely happens quite often. But I would definitely say we're still very lucky to generally, we do see pretty much an uptick every single month. We started with very little once the market came back after the FTX kind of blow up. And, it was a very, very small fund just starting off. But we've been lucky enough to win some awards. Most recent one in July was from the Hedge Week. We got some market neutral fund of the year in the cryptocurrency markets. So that was a great one to receive. So we've been lucky in some regards in the industry in general, but it's always not just a monthly fight, but a daily fight to make some kind of good results and keep things going steady.
How did the other funds find you? Is it through contact or word of mouth, or how did they come across?
So it's been really interesting that it's been really growing overall with word of mouth over time. Our team, we do our own marketing. Our head of operations really heads up all that, and we have someone in general marketing as well. But that kind of like grew and built traction slowly over time. But as we've gotten some awards, and we recently had this big crypto event, the Crypto Week out in Singapore, we got to meet a lot of really cool people and great other teams, and find out that, wow, we really know just about everybody in the industry, or they know of us. And so still in the middle of like closing a handful of new deals that are much, much larger, and it's exciting times. But I think everyone in our team has been saying that for at least like the last year. It's always the quote, it's exciting times. Well, it always is, isn't it?
How would you say people know if running a fund is the right thing for them?
If you like staying up late hours, contacting multiple clients per day, and doing trading, it's definitely the thing for you. It's definitely what you want to do. Definitely running a fund can be great, as in being able to take on large amounts of capital, be able to take the trades that you're doing, that you want to be doing, and be able to really size into those kinds of things, and do that while also managing things properly and having the oversight of your team. That depends on how big your team is, obviously, with what kind of fund you run. I know of some funds that are just single person, so it doesn't mean you have to start with this huge infrastructure, but in general, just managing someone else's money, I found it to be a real great benefit, asset to me, that it's not just, okay, I can make more this way, but, there's someone that you have to be accountable for it in the end of the day. You have to be accountable for yourself and make sure you're doing the right thing in the trades that you're doing, and not just kind of be lackadaisical or screw around with different things or just take a random trade every once in a while. I mean, that happens to so many people, where you do the trades that you want to be doing for so long, and then some kind of interesting news events coming up and like, hey, you know what? Let me jump all into this one. This one really might make it. And then you find yourself like all of that you worked for months, if not the entire year, and like, oh, you've lost so much of it because of some random thing. But even for myself, like doing this trade in this arbitrage style for these clients, it's like, oh, I have some other trade ideas. Well, that's completely different. I'm doing this one thing day in, day out, and this is what I'm really, really focused on. And I never take anything outside of that, which also is just nice because you can, stick to what your main focus is, and just know that I need to run this strategy, this style, and that's what they want from me, from us, from our team. This is what we need to do. There's not anything outside of this that should be catching my attention and pulling me away from doing this number one thing first. Running a fund in general, if you can do it, if you have the opportunity somewhere in life, it's great. It's great. And I would definitely say go for it.
Tell me where can I find you, or can I put you after this interview?
In general, you can find me on Discord. I'm sure you'll link put them in the link in the down below, as they say. But also, Twitter is best at Andres Trades, so you can find me there. But yeah, Discord and Twitter are usually my main go-tos. I have started an Instagram recently of my pictures of different things in Korea and the meals that I eat, and mostly selfies of me smiling. So if you want to catch some more of that, yeah, that would be great too.
So I'm appreciating the advice you gave his people. It's been good to go more in depth into how you trade and kind of things you do on a daily basis. So it's been fun, and hopefully you can catch up soon and discuss trading again. Could be cool.
Thanks a lot, man. Thanks for coming out, man.
Cheers.